from their offices here in London, just next to the Bank of England, next to Bank Station, if you know where that is. We're gonna take a look at the markets that we usually do. We're gonna take a look, of course, at the euro versus the USD and some stock markets and some other currencies and commodities as well. See if there's anything interesting happening in the markets. And if you're new to this, I've been watching the market since 2006, so I have great experience in trading and analyzing the markets. Professionally, I've been analyzing the markets since 2009 when I joined FXCM, which used to be one of the world's largest brokers at the time. But now I'm with ATFX. Okay, guys, so let's begin here. So euro dollar sort of continues to disappoint from a trading perspective. We were in a wedge, which looked like this up until recently, right? We had that breakout from that wedge, and I know some very clever people that bought here, but they got stopped out, and as well I was short-term bullish here. I didn't trade the market myself because I don't really trust the euro. I haven't probably I traded maybe just a few times in the last 14 months or so, and the reason for it is just very choppy. But what happened here, the market broke out higher, it's not back into the range, and now you have another wedge, but just a bit different. And this is the big problems with trending, trying to trade anything with a trend line, with the exception of the head and shoulders. The problem is that you draw one line and then you need to rewrite the line or to redraw it because it didn't really work out. Sometimes it works out, and that's why some people really like the sort of wedges and stuff like that. But I'm sort of reached the sort of maturity now that I can't be bothered. I really want just high quality setups because I just want to win. I just want to make money, and that's really where we are right now. Like, some people think you really have to trade all the time, but you don't. There are times when there's no opportunities in the market, and where it's better just to hold cash and let everybody else sort of ruin their ruin their trading accounts. Because at the end of the world, the end of the time, it's everything about relative power, relative. Everything is relative. Like, if you just keep your money and everybody else is losing their money, and you have deflation in the world, then yeah, suddenly, you're better off, right? So that's really the way I look at it. I want to keep my money so I can trade the markets when they start trending again. Now, in the case of the euro, we're stuck within a range. Anyone's guess is as good as mine. And my guess is that we're just gonna trade sideways here. We're gonna be within this range. The Federal Reserve is anticipated to cut rates. It's pretty much priced in, I would argue. I mean, it is priced in that they're gonna cut rates this year. And that meeting is coming up on Wednesday, on June 19th, and they're gonna tell us they're gonna cut. So what's gonna happen is that some interest rate products, like the short-term LIBOR rates, which sort of influences the rollover for forex traders, that is gonna change. So what happens now is that the US is just moving closer towards the EU, closer towards the Australian dollar, closer towards New Zealand dollar, and Aussie dollar, and the New Zealand central banks have been cutting interest rates. So we are just moving closer. We're not moving away from each other. And when economies move away from each other, that's when you get some decent trends. And we're not having them here. They're all converging. So I think here that it can continue to remain a difficult time. And eventually, hopefully, we'll have some sort of a breakout. And if we start to trade below 2019, we might go lower. The 2019 low, that is. Or if we trade above 113.52, which is as high, we might start to go upwards. But I'm sure there's going to be better setups than the euro versus the USD at that time. GBP versus the USD, sort of the best scenario I had was the break to 27.64. That never happened, and the markets traded lower because we can't trade much higher. Well, you should trade lower. We're within this little range here. It would not surprise me a bit if the market tries to take out 25.54, which is this low here from May 21st. So probably slip below that, trigger a few stop loss orders, and then we're probably going to go back up to the range, because from a bigger picture perspective on this daily chart, as you can clearly see here, there's a larger support level down here, and that's going to be defended. It's only if we start to move away from this big area, where we have been oscillating since August 2018. So almost for a year this market's been trading sideways. Just when we move away from that area, that I think we can suddenly start to turn really bearish, and we can probably target much lower levels. Dollar versus the Japanese yen. This is your daily chart, and we're still dealing with, I think, weak economic data. So the Empire Manufacturing Index is going to be out today. It's the first data for June, and it's going to give us a bit of a hint of the situation in the US, and then we get more and more data over the next few weeks. And then, you know, before we know it, it's time again for NFP. So that's coming up. And if the data continues to deteriorate, which would not surprise me, then I think the dollar yen is probably going to go lower. But we need to sort of wait for the right entry, which will be up here, pretty much at 109. So from 109, I think people will probably going to start to short sell. And, you know, I've been saying this for a long time now, and it's starting to sound like a broken record. But, guys, nothing at all has happened with this pair since May 31st. So, even though the outlook has been the same for 17 days, nothing has really happened here. The market's up a 56 pip. So again, we need to be persistent and with the markets and trading, and we need to be patient. If you're not patient, that will hurt you. Next market is prices of gold. And gold here, they had that breakout here, and then the idea was to wait for a bit of a pullback. The price is now in the buy zone, so if you wanted to buy it, this is the time. It should hopefully bottom out here, and as long as you trade above 1319.93, this is a short-term bullish trend. Why? Because the price is creating higher and higher lows, right? And again, this could be, and I really hope so, because everything is just trading sideways. So I really hope that we're gonna take out 1376. When we take that out, it's gonna be a new sort of highest price since March 2014, and it's a massive pattern, and it could potentially be the beginning of a resumption in the rise of gold. And here again, when the Fed cuts, it would make perfect sense to for this to trade upwards. And if the market otherwise sort of slides and we have a recession, then I still think people can buy a bit of gold. So this is what you want to focus on, and if one wants to get pre-positioned for a breakout, then this is really where you want to focus on. And if you just follow the short-term trend, then this is again the buy zone. I'm waiting for that big break. That's what I'm waiting for. And here are crude oil prices. Crude oil prices themselves are just trading sideways here. There's not too much to do. Their overall trend is bearish, but we slid quite strongly from the highs here. We're trading at 66, and then we can trade lower here. There was some comments from OPEC, I think it was the delegate from Saudi Arabia, that said that in their meeting in July, they're probably going to go ahead with further cuts, or go ahead with cuts in production. So that is obviously supporting the market a bit. But again, crude oil prices down with about 23%, which is quite a lot. We're pretty much back at the beginning levels of 2019. And here, I think it's better just to be neutral, not be long, not be short, unless you're very confident in what you're doing. And I would wait for a break to 56.2, because the people that are saying, oh look, OPEC is going to cut production, it's time to turn bullish, and they'll be buying at these levels, and they have their stop loss just below here. So if I think if we trade below these levels, you probably see further weakness. This is the S&P 500. S&P 500 is trading sideways in the short term, and in the big picture, in the daily, it's also trading short term, which is a bit unfortunate, but it is what it is. If you look at the 4-hour chart, we could potentially roll over on a break to 2866.9. And if we take out the high, you can probably have a resumption of the uptrend here, go a little bit higher. And here as well, it's an interesting market, which if we take out these levels, we could potentially go upwards. Because in the S&P 500, the market has been trading sideways for 1.5 years here as well. literally in January 2018, we started here, and this is sort of well, you can clearly see it's a big range, right? So for now, I think we're gonna go down eventually, but take this level out, and I think it's time to turn bullish. German DAX, not much has happened here either over the last few days. I still think, you know, if I show you the 1 hour, I still think this market could, actually 4 hours better. I think this market could still potentially be trying to carve out some sort of inverse head and shoulders. I know it's not your standard textbook one, but it does provide some guidance if it will play out. So if it goes down like this and then potentially trade upwards, then that could be something, because you would have this right shoulder and then you would have this left shoulder, and then this is your head, and then the difference here would be something you can do like that. But we're here right now. I think we need to go down first. Alternatively, which could be something, you know, you're trading sideways like that, which we are, and then this becomes like a little rectangle breakout, and we would just need to see how the market reacts. It was so long time ago the Fed cut interest rates that I barely remember how stock markets reacted. But what I have read online really quickly in comments on Twitter and things like that is that usually the market goes upwards on the expectation of Fed rate cuts, and then when the Fed actually starts cutting, the stock markets actually tend to trade lower. And I think the many reasons for that, you know, the Federal Reserve in general tend to be quite late to the party, and it was also very interesting that the Federal Reserve are actually the best institution in forecasting economic growth in the US or in the world, really. Why is it like that? Well, they control interest rates, right? So as soon as the outlook doesn't match what they're projecting, they just cut rates. And when the outlook is too strong, they just increase interest rates. So that's why they have control. But that doesn't take away the fact that they're the best. Research has shown that they're the best at forecasting the markets, or forecasting not the markets like stock markets, but the economy. So if the Fed starts to cut interest rates, then that should be something to get you worried. And I would assume that we could potentially see the market potentially trade. Just a second here. Sorry about that. So yeah, so I think that could be something that could potentially be bad for the stock markets. But it's gonna take a little bit more research. I need to look into that, and we'll take it from there. Okay, guys, let's see if you guys have any questions. Not a single question today. Wow. Did you guys have your morning coffee yet? Just kidding. I know some of you guys have been up for a very long time yet, because on time differences and things like that. Okay, so no questions. Less work for me. Guys, I want to thank you so much for watching, and I want to thank you so much for being so supportive. I know a lot of you guys have been watching this presentation for years, and I also appreciate all those likes. And I think we're going to wrap things up. Hopefully we can come with some more interesting stuff later today, or most likely over the next few days. Don't forget to subscribe to the channel, because up here I publish more sort of different pieces. Like I did an update on the crypto markets about 5 days ago. I did an outlook on Uber, and last week I talked about the interest rate markets and the Fed rate meeting. So check that out. It's called Front Row that, and there's no specific time or when I publish that. So the best thing is just to subscribe to us, and then you're gonna see it in your little notification here when you get those videos, or when you get those numbers or updates. We do have some education here as well, so if you're new to the market, or even if you're not new to the market and you maybe want to pick up something new, and we have the trading education. It's quite a big library. It's about 18 videos for now. I am not the person behind these videos. It's a third party that we use, so can't vouch for all of it, but so far people seem to like it, and maybe you can learn something new. So don't forget to check that out. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow. Actually, we got a question. Vasilius is asking about the FTSE. Let's take a look at the FTSE. So, this is the FTSE 100, and yeah, I remember this one. This is an old Head and Shoulders actually, that I was watching. Wanted to trade it, but never traded it. So let's begin with a big picture approach. This is your weekly. So the weekly, we're in this funny pattern. I think they call it the megaphone. It's not proper megaphone because it's actually, when you have a market that goes like that, like a fan, then that's problems because things just deviate from each other and it's sort of not sustainable. Putting just these lines on top there actually wouldn't actually help us too much. So I can identify some simple levels for you. So that's resistance. This is support. Take a very, very, very long-term view. So data from 2012. Then we're in some sort of an uptrend. You have a low here, and then you have here what seems to be an important low as well. We can take some fib. So how much should we correct? We corrected more than 50, almost down to the third fib. So I think this is a sufficiently strong pullback given the big picture outlook. Doesn't mean that we can't revisit, but this should probably be it. So from that perspective, the trend is short-term bullish above here, and the next sort of important section of levels is down here, which is 70.41. So as long as you're over 70.41, I will probably treat this as some sort of a rectangle. And the problem with rectangles, or there's no problem with rectangles except that they correct quite a lot. So if you really want to be buying, you probably should be buying at the bottom section here. If you're too eager to get in, maybe on the third fib, which is at 7,228. Otherwise, in line with that longer term outlook for the last 10 years or so, and the shorter term levels from here, I would say the trend is bullish above 70.41, and some people might look to buy here and do something like that because you're seeing this as some sort of a rectangle. But that sort of assumes that the volatility remains the same. It could also be that the market is just going to converge and then have a breakout, and we will have a breakout at one point, but we might potentially be able to buy down here on a dip. Otherwise, it's not too much to say because within the short-term levels here, yeah, I can do some similar exercise with the 1 hour, but I don't think just because we slide below some of these levels that it's going to matter too much. Right now, the levels that are important, you'll find them on the daily. You can sometimes find levels on the short-term charts that are important for the markets, but when the trend is weak, the respect for the short-term levels deteriorates. Good morning, Vasilios. All right, guys, we're gonna wrap things up. Guys, don't forget to hit that like button. Vasilios, thank you so much for the question. I hope you have a lovely day, and I'll see you guys tomorrow at 9:30 a.m. London time here at ATFX YouTube channel. Don't forget to share. Thank you, and bye-bye.